what it's all about. And maybe that's true to a point, but it's not completely true, at least in my opinion. I believe it's a language, and it's up to us to learn it, and once we learn it and understand it, we can interpret what happens on the chart with some reliable probabilities to allow us to make safe, profitable trades. And what you're looking at on your chart right now is two indicators, aside from your candlesticks. You have a T line, which is referred to as the 80 MA, and I use the 5 EMA as a trigger. And when I say trigger, I'm just looking for simple crosses on whatever time frame. That's it. Now, is there something unique to the T line? I think so. A lot of other people would agree. But there's a lot of a lot of good things about a lot of methodologies that we use. I do prefer trading the T line. Why? Because of its simplicity. It is simple to understand, and it's simple to use. I add a trigger in a shorter time frame just to give me indications of when the market might be changing its mind in its direction. You got to remember, nothing goes straight up and nothing goes straight down. And if you've traded with leverage, you understand what I'm talking about. No matter how much of a head start you think you have, if you're using too much juice, you're going to see price come back and take away all your money. But the chart will tell us what we need to know. It doesn't know at the time whether you're leveraged or not, but it'll tell you what price is going to do with some reliability. And it doesn't take 1,000 different indicators to figure it out. It just doesn't. So all you have on the chart, that yellow, is at 80 MA, which is the T line. The other is the 5 EMA. What's unique about this is it's part of our script where it will now change colors when it senses that the direction might be changing. Instead of waiting for the confirmation, it'll give you a little bit of an indication by changing color that it might be sensing a fade. And what we're looking at is the 4-hour Bitcoin chart. We can use this on any time frame. But although the market feels like it's gyrating all over the place at times, and let's keep in mind that the noise in the market that so many of us are attracted to, the opinions of other people, and the list goes on, that's the noise. Along with that volatility and up and down in price, that added noise during that time just adds to the chaos. And we talk about blocking out the noise, and one of the ways you block out the noise is by paying attention to the chart. Now, we've simplified it for you so that it can't get too much easier. We know that when price trades down below these levels, we're in a downtrend. And that there really isn't much use in longing these candles, either unless you're scalping or you're looking for a simple trade. But this is a downtrend. Pretty simple stuff. No matter what the market is doing intraday or on a monthly basis, or the up and downs of red and green days, some of which are very extreme, the market will tell us, if we follow its lead, what it's doing. This Bitcoin 4-hour chart is yet another example.